I do not recommend this, but some people actually do this because they say, oh, I want to compare lenders and I want to compare numbers. You can compare numbers without asking them to run your credit. Okay. You could just tell them what your score is, and then they could just tell you based on a rate sheet. All of these industries, especially auto industries, like going to the dealership or something like that, as well as mortgage industries, they all have access to interest rates. So they could tell you specifically what those rates are going to be based on the score that you tell them. Okay. But if you do the hard inquiry with the mortgage industry. Hey, what's going on, guys? In this video, we're going to talk to you all about understanding soft and hard inquiries. Let's get right into it. In this video, we're going to explain the following. Number one, what are credit inquiries? Number two, what is a hard credit inquiry? Number three, what is a soft credit inquiry? Because there is a difference between the two. Number four, how hard inquiries affect your credit score. And last but not least, number five, how to manage credit inquiries wisely. Let's get started. So first things first, what are credit inquiries exactly? Okay, so credit inquiries occur when a lender or company checks your credit report to access your financial history. Another way of knowing this is usually when they ask for all of the digits for your social security number. Anytime you're let's say, for example, at a car dealership, talking to a mortgage lender, you may be talking to someone over the phone about applying for a credit card and they need your full social, then more than likely it's going to be a hard inquiry. Now, sometimes it's just an identity verification. If they just need just the last four, that's more than likely a soft inquiry, which we'll get to in a second. But they help lenders determine your credit worthiness before applying for loans, credit cards, and other financial products as well. Like, for example, it may not be a financial product, but sometimes if you're renting an apartment or something like that, or let's say, for example, applying for insurance, they're more than likely going to give you a hard inquiry as well. There are two main types of credit inquiries: hard pulls and soft pulls. Okay, so a hard pull is also known as a hard inquiry. And of course, a soft pull is known as a soft inquiry as well, each with different impacts on your credit score. So what is a hard credit inquiry? A hard inquiry happens when a lender reviews your credit report as part of a loan on a credit application. Okay. Now, this type of inquiry can lower your credit score for a short period of time, and it also says slightly and remains on your credit report for up to 2 years. Now, another thing to keep in mind is that with an inquiry, even of course with it being a hard inquiry, as it gets closer to that 2-year time frame, it's going to have a lower value. Most of the time when people end up seeing a hard pull or hard inquiry on their credit report, it's usually about 5 points or less. It may vary, but it's nothing too much to worry about because the whole point of having credit means that someone has to take a look at it. Okay. Now, common examples may include applying for a mortgage, as I mentioned before, an auto loan, or a credit card. Now, what is a soft credit inquiry? Now, a soft credit inquiry occurs when a company or individual checks your credit report without a formal application for credit. This is normally when, like I mentioned, they may not ask for a social. They may ask for the last four of your social. A lot of times they need basic information: first name, last name, sometimes date of birth, your email address, your address, something like that. That's usually what's going to lead to a profile, and it can match that profile, and it can give the lender or financial institution, it'll let them know, hey, listen, we found a match and this is what that score is, and it doesn't affect your credit score. This also applies when you are looking at your own credit. It's a soft inquiry. Okay. Real quick, did you know that you can add your monthly subscription services like Netflix or Disney Plus, or even your cell phone bill to your credit report to improve your credit score? All you got to do is just scan this QR code or click the link in the description below to learn more. Now back to the video. These inquiries do not impact your credit score and are often used for background checks or a pre-approval. And mortgage companies do this as well. Even I think actually every company, not I won't say every company, every industry has some type of soft inquiry software. Credit card companies may say, hey, see if you get approved for this, no impact on your credit score. Personal loans have started saying this, for years now. They're saying, hey, go ahead and apply, no impact on your credit score. That means it's going to be a soft inquiry or a soft pull. Common examples include checking your own credit, employer background checks as well, and pre-qualified credit card offers too. Now, how hard inquiries are going to affect your credit score? Okay. Now, multiple hard inquiries in a short period of time can signal risk to the lenders and temporarily lower your score. Now, this is not the end of the world because every industry is going to look at this differently. Let's start off with like credit card companies. Now, credit card companies, they do care how many increases that you have, especially if they are related to other credit card offers as well. Why is that? Most credit card companies don't want to immediately give you a credit card approval if you just applied with someone else just recently. That doesn't mean that you can't do it. There's a lot of strategies out there because some credit card companies, they don't look at all three. For example, if a credit card company looks at Experian only, then but you want another credit card, then it only makes sense to apply for a credit card that only looks at TransUnion or looks at Equifax, something like that. So again, that's that strategy there because there are times where people get denied for, a credit card because they were looking at other banks and trying to see if what those credit inquiries were specifically to that bureau. Okay. Then another industry would be like the mortgage industry. It's very common that a person goes to a mortgage lender, asks questions, get their credit ran, and then say, okay, what's going to be my interest rate? What are going to be the terms, right? And then they leave that institution and then start that entire process with someone else. By the way, I do not recommend this, but some people actually do this because they say, oh, I want to compare lenders and I want to compare numbers. You can compare numbers without asking them to run your credit. Okay. You could just tell them what your score is, and then they could just tell you based on a rate sheet. All of these industries, especially auto industries, like going to the dealership or something like that, as well as mortgage industries, they all have access to interest rates. So they could tell you specifically what those rates are going to be based on the score that you tell them. OK, but if you do the hard inquiry with the mortgage industry, because it's so common, especially back in the day, if you have a certain amount of inquiries within a 30-day time frame, it's only going to affect your credit score as if you had one inquiry. A lot of people don't know that, but that's only within a 30-day time frame. Okay. If it's outside of that 30 days, they're going to treat it a little bit differently. Okay. But now multiple hard inquiries in a short period of time can signal risk to lenders and temporarily lower your score, as I just mentioned. But keep in mind, when you're going, like, let's say, for example, applying for an auto loan. Now, those are about the only places that do not care how many times someone has ran your credit, especially if you have gone to other dealerships and such, okay? Because they can see that you just left the dealership. So the assumption is you probably were denied, which is why you're now at their dealership. But again, some people think it makes sense to get their credit ran, get the information, and then shop around and then just keep repeating that process. It doesn't make sense to do that process. You're going to drop your score unintentionally. So again, you can always ask questions instead of just letting them run your credit. Okay. Real quick, be sure to download our free ebook today. All you got to do is scan this QR code right here or click the link in the description below. Now back to the video. Okay. Now FICO models typically group multiple inquiries for mortgages, like I just mentioned, but also to auto loans sometimes and student loans within a short window, 14 to 45 days as one inquiry. Now you're still going to see that inquiry on your credit report. Okay. Again, by law, they must still show who looked at your credit report. But at the same time, just do understand, as far as the algorithm is concerned, it's only going to affect it as if it's one inquiry. Okay. Responsible credit management can help minimize the negative impact of hard inquiries over time. You don't want to look desperate, and you also don't want to look like you don't know what you're doing. Ask questions first, and then once you make your decision, then let them run your credit. Now, how can you manage credit inquiries wisely? Here's something that you can do. Limit unnecessary hard inquiries by only applying for credit when you need it. Now, sometimes they say it's when needed, but sometimes you're just doing research. You're doing your own investigation. You are asking questions. And in order to get certain answers, I totally get it. They have to run your credit at some point. But again, as long as you know what your scores are for that industry, for example, people don't know that you can go to myfico.com. That's myfico.com. And you can actually get, let's say, for example, their advanced plan. That advanced plan is going to show you all of your scores for all of your categories. Those categories are going to include mortgages, auto loans, personal loans, credit cards, and some other industries as well as various of those scores, because some industries still use some of those older scores, and some industries actually use those newer scores as well. Okay. But regularly check the report to ensure that all inquiries are legitimate and dispute unauthorized ones as well. This is key because there are some times in which some people may be going through identity theft and they don't know it. This is where someone may be applying for credit in their name, and that's where you want to be on top of that. Usually it may not be something that's credit related as far as borrowing money. Sometimes it's getting utility bills in your name or whatever the case may be. But that means that someone is trying to apply for something in your name, and you most definitely need to go ahead and get that resolved. Next would be space out the credit applications to avoid multiple inquiries affecting your credit scores at once. This goes back to knowing which bureaus are going to be ran. Now, when you're going to buy a car, chances are they're going to look at least 2 to 3 of those credit bureaus. When you're going to go apply for a mortgage, they're looking at all 3. When you're applying for a credit card, they're more than likely going to be looking at 1, sometimes 2. So keep that in mind as well. And when you're looking for apartments and insurance, more than likely they're going to be looking at all 3. But again, this is where picking up the phone, making that phone call and saying, hey, listen, which bureaus do you all look at? What's your interest rates? What's your terms based on these scores? Let me know your thoughts in the comment section below about inquiries in general. If you have questions about some inquiries in general, but again, what's your worst story that you have with credit inquiries? Usually it pertains to, hey, I went to the dealership, they shotgunned my application out to all these other banks. But again, everyone has a story about credit inquiries. We want to hear yours in the comment section below. Thanks for watching, and we'll see you guys on the next video.